BigBear.ai is up 36% this year and more than 250% in the last 12 months. And the stock, well, it's sitting around $6.06 right now. So can this keep going, or are we about to watch the whole thing snap in the other direction? Because honestly, I'm still not convinced either way. Because on one hand, the company builds AI for people who don't get second chances, right? The DoD, the NSA, the Air Force. And you don't land customers like that unless your tech actually works. On the other hand, revenue dropped about 20% last quarter, margins slipped, and the stock, well, still trades with a beta north of 3. And that kind of volatility can either make you rich or wreck you, depending on your timing. And of course, what happens next. But here's what keeps me up at night. Big Bear just agreed to buy Ask Sage. This is a secure generative AI platform that's projected to get $25 million in recurring revenue next year. That's 6 times what it produced in 2024. If that growth materializes, it changes the entire trajectory of this business. And that's why in this video, I'm breaking down whether Big Bear's momentum is real, how the acquisition shifts the entire valuation, and a signal that will tell me whether or where the stock is actually headed next. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers to help retail investors like us make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. BigBear.ai specializes in transforming massive, complex data sets into clear, actionable insights for clients that operate in high-risk and high-impact sectors. Their AI analytics and predictive decision tools support national defense, border protection, infrastructure planning, and large-scale logistics. And this helps the organizations anticipate threats, allocate resources, and respond with confidence. And Big Bear's technology, it's not experimental, far from it. It's already deployed across some of the most demanding institutions in the country, including the DoD, the Department of Defense, the NSA, and even the US Air Force. And this level of adoption, it validates the company's capabilities while also reinforcing its reputation for delivering trustworthy operational AI. And when institutions like these trust your technology, it usually means that something big is brewing. So stick with me here. The company is now expanding beyond government work and bringing its intelligence tools to commercial markets, such as those in finance, transportation, and digital identity. Their product suite includes TrueFace. This is a secure facial recognition system with features like liveness detection, mask recognition, and Veriscan, a platform that streamlines identity verification at airports and shipping ports. And with this foundation, Big Bear is positioning itself for broader growth as interest in practical, mission-ready AI continues to rise. And if that expansion actually sticks, this could shift Big Bear from some niche defense contractor into a much bigger AI player, which is exactly why this next part matters. Now, last time I covered Big Bear, the stock was trading around $5.73. Right now, it's up about 6% to trade around $6.06. Year to date, though, the stock is up around 36% and about 250% in the last 52 weeks. So a run-up like that, well, begs the question, is this just momentum or the early stages of something real? Because when it comes to volatility, this stock has a 60-month beta of, get this, 3.42. It makes it more than 3 times more volatile than the broad market. I mean, Big Bear is a high volatility investment with significantly larger swings in both gains and losses. I mean, this thing can rip, but it can also drop fast. So knowing what's driving the recent movement becomes even more important. Now, let's have a look at the chart because it shows us that Big Bear stock has been very choppy over the last few weeks. So what could stabilize it? What could clear the direction? Well, the company recently released its third quarter financials, and quite a few of the folks on my Discord asked about it. So let's dive in. BigBear.ai released its third quarter financials on November 10th and reported that revenue was down around 20% to about 33 million. This was because of lower volume on certain Army programs. Meanwhile, the gross margin came in at about 22%, down from 26% a year ago. Now, gross margin shows how much money a company keeps after paying the direct costs of what it sells. And this is an important measure because stronger margins mean better pricing power, tighter cost control, and more room for long-term profitability. So a drop here isn't good, but what comes next might surprise you. Big Bear's third quarter net income hit $2.5 million. This is a big improvement from the 15 million net loss that it reported in the same quarter of last year. Now, management did report, it came clean, that it was largely the result of a non-cash change in derivative liabilities. And this significantly reduced the company's overall loss for the quarter. So it wasn't from selling more. The net profit was due to accounting adjustments. Sure, it helps the bottom line, but unfortunately, that net profit didn't come from sales. Big Bear also announced that it signed a definitive agreement to acquire Ask Sage. This is a rapidly growing generative AI platform designed for secure use inside defense, national security, and other highly regulated industries. Ask Sage is projected to generate approximately 25 million in adjusted annual recurring revenue, which is roughly 6 times what it generated in 2024. And Big Bear will acquire the entire company for $250 million, with final pricing adjusted for debt, cash, and working capital. And this is where things really start to get interesting, because if Ask Sage delivers even half that projected growth, it materially changes Big Bear's revenue mix going forward. The company ended the quarter with $456 million in cash and cash equivalents, which is a decent chunk of change for continued operations and growth. At the same time, Big Bear has a current ratio of 3.13. And this just means that they have about $3 in current assets to cover every dollar of current liabilities. And liquidity like this is rare for a company at this stage, and it gives them the room to take risks that the smaller competitors just can't. Management also reiterated revenue guidance to come in between 125 and 140 million at the end of the fiscal year. If they should end at the high end of that, it'll tell us that the slowdown in the Army programs was temporary, and it's something that I'll be watching closely. So that's it for Big Bear's third quarter financial update. And before we continue, if you do enjoy videos like this on popular stocks, keep an eye on the channel so that you don't miss out on anything. So with all that out of the way, is Big Bear a buy at these levels? Well, consider that a consensus among 5 analysts rate Big Bear stock a moderate buy with a high target price of $8. So this suggests as much as 32% potential upside from the most recent closing price. Now, the average score is 3.8, and it's remained unchanged over the last 3 months. Now, analysts, they don't always get it right, but when they cluster like this, it usually signals confidence behind the scenes. And I agree to a certain extent. The company reported lower revenue and softer margins, yet they still delivered a notable shift to positive net income, and that was driven by non-cash changes in derivative liabilities. And also, let's not forget that Big Bear also maintained a strong liquidity position, giving them more than enough coverage to meet their short-term obligations. And of course, the planned acquisition of Ask Sage adds some meaningful momentum. However, plans and prospects are one thing, and execution is something totally other. So I'll definitely be watching for new developments, because at this stage, Big Bear, they don't need any more hype. They need follow through. But what about you? Do you see the long-term potential in Big Bear AI? Let me know your thoughts in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it'll help others find it. It supports the channel. And of course, you won't miss out on any of my future deep dives. Well, folks, that's it for me today. I want to thank you so much for watching, and I'll see you next time.